guys, this is Imran from Options Insight. Due to the incredible interest that I've had from people asking me about crypto options, once I've told them I've become active in the space, I thought it made sense to start making videos about crypto and crypto options specifically. Now, I'm not a blockchain or crypto expert, but what I am is an options expert. And since June, I've been trading Bitcoin and Ethereum options with my own cash, and I've managed to 5x it. I've also managed to do that in a way where my risk was super controlled and I wasn't going to lose a hell of a load of money. So the idea of these videos in this new series, which I'm going to call Crypto Insight, is to talk you guys through some of the strategies and ways that I'm trading crypto options and taking advantage of my knowledge of trading volatility, term structure, skew, and being able to manipulate those positions to give myself some edge and give myself some advantage in the way that I express my views to participate in these crazy wild swings that crypto markets can have. Being a vol trader, I'll tell you now, the most exciting and the most fun assets to trade, volatility, are the ones that know how to move. And right now, there's no other asset class that knows how to move like crypto. So with that, I hope you enjoy this video. Please subscribe to the channel if you like this content, and feel free to sign up for a free trial to Macro Insight, where you'll get this type of content. You'll also get other asset classes, and you'll get live Q&A with me. Here's the Bitcoin chart, okay? We had that explosive move up towards 42. I had said that I had been long that market and I'd used risk reversals to hedge it, right? So what I've been doing is I've been selling some upside calls in January to be able to finance some 32,000 puts in January. So that was my initial hedge, because I didn't want to give up my exposure to Bitcoin, but I wanted to hedge it because I felt like the market was overbought and there were a lot of signals telling me that. So then we got the correction, okay? But then we bounced pretty hard and we've been consolidating around that sort of 36,000 area, okay? So now I had a hedge that was basically expiring on the end of January. And what actually happened was a massive buyer of January calls, not January calls, I think a massive buyer of calls, and I don't remember which expiry he owned, but basically he had a load of 36,000 calls that he bought before the market broke, so back end of last year, and in a massive notional. And this guy rolled his calls into the January 56,000, 64,000, and 72,000 calls. And he did it in massive size. So he created this massive vol squeeze in the upside in Bitcoin with the end of January expiry. And so that made those volatility levels go up to like 230 last week, right? Which is pretty much the highest I've ever seen it, yeah? So what I did there was I sold more of those calls because I thought that was ridiculous. And obviously I'm a holder of Bitcoin, so I can afford to sell calls against some of my holdings, especially when they're trading at astronomical prices, right? And then what I did with my January puts, which are 32,000 strikes, I wasn't entirely sure that those puts were going to pay out because we might not get the sell-off before January expiry, especially if you've got a crazy guy buying those calls at 60,000 that's making the whole street short upside. Maybe that's going to drive the market higher, okay? I don't think personally the market's going to get above 60,000 before the end of January, but you never know, okay? So what I did is I rolled my January puts into February put spreads because the volatility is very high. I don't want to pay up for that expensive vol, so put spreads work better, more efficiently in a high vol environment. So I rolled that put protection into it 1 month further out, and I did it in an efficient way by doing it in put spreads, okay? So I've still got put spreads in February protecting my position, and I'm short January calls, okay? And those January calls, thankfully, over the last 2 days have got annihilated, and they're down 40 vol points. So they've evaporated, and they're not worth that much anymore, okay? So that's where I'm at. And my intention is, I suspect we probably continue going higher, maybe towards 40,000 over the coming week. If that happens, my calls will still go out worthless because they're going to expire at the 29th in 10 days. If they get cheap enough, I'll just buy them back. There's no point being short them. And then I'll probably sell some February calls if I feel like they're expensive enough. or I might wait for this guy who buys calls. I might wait for him to buy a load of calls, and then he'll squeeze that vol up again, and I can sell into it. Maybe something like that, because I've got ammunition to sell those calls because I am long Bitcoin. I'm long crypto. So if you're long crypto, you have bullets to sell upside against it, and it's a great way of financing any protection that you want, right? So that's called a risk reversal, where you sell calls, you use that premium to buy puts, and that protects you from drawdowns in the market, basically, right? So that's my game plan, to roll into February calls at some point, and then I might even buy back some of those puts that I'm short on the put spread in February if the volatility comes in, if I want to have a little bit more extra protection on the downside. But kind of depends how things play out, right, and how this thing looks. Right now, we're kind of chopping around kind of in this triangle. So you can see this triangle here is forming. Generally, you know, when this sort of coiling price action happens, you kind of start coiling, and then you break one way or the other. Who knows where that break's going to come, but it's probably coming in over the next week, probably some sort of break that might take us either up above 40,000, or we might go down into these support zones of 30 to 25 area, right? So that's kind of Bitcoin. Now, the other thing, Ethereum is going nuts. Ethereum's up 12% today. The way I generally track Ethereum is through the Ethereum Bitcoin ratio. That's had a really nice leg up today, obviously, best part of 10%. Well, yeah, best part of 10% that spreads up today. If you look at a long-term chart on that, I mean, this thing's got some crazy potential. Here's a long-term chart on that spread. We are attacking resistant levels, right? So there's a massive resistance level around 0.04, which we are, you know, maybe 6 or 7% away from. If that gets taken out, then on the big picture, I mean, you could get some serious outperformance of Ethereum, right? You get a fairly sharp move in this ratio up to 0.05, which will be an outperformance of another 20-25%, right? So Ethereum could outperform Bitcoin by another 25% in short order, right? So Ethereum's hot right now. Definitely something to be involved with. Definitely worth having some percentage of your crypto holdings in Ethereum when it's exhibiting this type of price action right now. Yeah, and it gives you exposure. Like, you know, the use case of Bitcoin and the use case of Ethereum are quite different. Yeah, you know, Bitcoin is supposedly a store of value, a fiat currency debasement hedge. Yeah, an alternative to gold in the digital space. Okay, whether you agree with those things or not, up to you, but that's kind of what it's being pitched as, right? Whereas Ethereum is the building blocks of all of the DeFi development that is trying to offer decentralized solutions to finance in the future, okay? And that makes it a very different proposition, basically, right? People have kind of said Bitcoin's like digital gold, Ethereum's like digital oil, basically, right? Yeah. So, you know, it's quite an interesting analogy, but if you believe in that, then you want to probably have some exposure to both. Yeah. That's the way I look at it, right? So I mean, you know, blue sky scenario for me, Bitcoin could get to 100,000 this year if we're lucky. It could also go down massively, let's be clear, right? But if the bull story is intact, it could go to 100,000 this year. Ethereum could go to 5,000 this year, right? That's what I think is possible, right? I know it sounds pretty outlandish, but it's possible, right? It's becoming more and more on people's radars, you know, and when these momentum trades kick in, they can do some crazy stuff, right? And the liquidity of those markets isn't big enough to digest some of the demand that's coming in, basically, right? So some of this institutional demand that's coming in for this stuff is what's making it gap up ridiculous amounts in a day. I mean, Ethereum up 12% just today, right? Prime example, right? I don't know how much got bought to make that move happen, but you know, it probably wasn't, in the context of things, it probably wasn't that much, right? From an institutional flow perspective. Right? Thanks so much for watching, guys. If you enjoyed this video, then we'd love to have you join our Macro Insight community. Just visit www.options-insight.com and sign up for your free trial to our live and interactive weekly macro call. If you haven't already done so, please subscribe to our YouTube channel. You'll find more market updates, class highlights from our summer academy, and also video tutorials on anything from options basics to market making fundamentals. You can also connect with me directly. I'm on LinkedIn, Twitter, Facebook, Instagram. You can follow me on any of those platforms. Or alternatively, feel free to send an email to inquiries@options-insight.com.